Hi everyone, welcome back to the channel. Are you looking to buy a brand new EC or understand how a brand new EC purchase works? This video is just the right one for you. Hello, my name is Sherwin once again, and let's dive into the content which I'll be going through today. Okay, for a start, right, I'll be running through the eligibility of purchasing a brand new executive condo, followed by the timeline and payment. Thirdly would be the affordability, and lastly, for you to have a better understanding, because everything can get a bit confusing, right? I'll be running through a few case studies which would be applicable for those out there looking to purchase their first brand new EC. Let me go into the eligibility. For that, I actually done up a comprehensive guide towards brand new EC purchase in Singapore, which is rather comprehensive. I will not go too much into it, but I'll show you a few snippets. Firstly, what's the definition of executive condo? To keep it short, right, executive condo is actually just private condominium with facilities selling at a subsidized price by our government and built by private developer. The whole objective of this executive condo is to bridge the gap between public housing and private condominiums, which works very well for those that would like to upgrade but do not want to break the bank. That's why requirement for EC is more stringent and strict as compared to brand new condominiums out there. Okay, so some benefits of choosing an EC. Firstly, it has condominium facilities. And secondly, there's government subsidies available depending on your income level. Thirdly, it's lower cost compared to a brand new condominium. And lastly, the potential of capital appreciation once it hits its MOP period of 5 years is incredible. So let's look at eligibility. Firstly, definitely would be the income ceiling. You cannot exceed household combined income of $16,000. Of course, if you exceed by a little bit, maybe $500 to $1,000, we have successfully helped a few of our clients to appeal for a chance to ballot before. But then again, it's case by case basis. Do reach out to me if you would like us to help you with the appeal. But if your income is like 20,000, 22,000, then no point, don't try. Just go and buy a brand new condo instead, or a resale condo. Okay, following which would be the household composition. These are the groups available which qualify to buy. Out of these 5 groups, right, the minimum age are all 21 years old at the time of application, but for joint single, sadly, you must be at least 35 and above. Okay, citizenship requirement, because this is something that is subsidized by our government. Sadly, as long as the nucleus or household composition there is a foreigner, you are not eligible to purchase. And one applicant must be at least a Singapore citizen. Okay, so for foreigner wise, you can only buy it in the open market. And if you are looking for a resale EC, the resale EC you're looking at must be minimally 10 years old after it is fully privatized. Okay, some of the property ownership restriction. For those that want to purchase, there's a first timer and a second timer. What does it mean, right? For first timer means they have never bought anything with government housing subsidy before. Government subsidy includes BTO and a brand new EC and whatever grant that you have taken from the government previously to purchase flat B in the open market or BTO. Of course, proximity grant is not included. Okay, if you do have a private residential property, but you do not, but you have yet to take any grant from the government previously or subsidy from the government previously, you are eligible to buy, but you must wait 30 months after you dispose your private property. Okay, what about non-residential property? It is okay for you to own a non-residential property, but within that household, right, each individual cannot own more than one non-residential property. Definition of non-residential property is just like factory, offices, retail, B1 industrial, B2 industrial, and stuff like this, so you get the idea. If you do own a HDB at the moment of purchase, but you still qualify to buy the brand new EC, you have 2 choices. One is to dispose your HDB, and the second one, which is more common, is to continue to stay in your HDB but dispose it within 6 months of the completion, or rather key collection, of your executive condo. Okay, so these are a few of the other important conditions you would have to do, which is the waiting period and housing subsidy. Resale levy is payable, and there is waiting period if you did cancel any purchase from the government previously. Okay, of course, this guideline includes the CPF grant, buying process, after purchase, and some key takeaway, which I will not go through in case the video gets too dry and boring. But moving on, let's look at the timeline for executive condominium. Okay, executive condominium is slightly different because for brand new condo purchase or for a resale condo purchase, right, you do not need approval from our government. But in this case, you do need. So how does the EC timeline look like? Okay, for a normal one, for a normal private, it is usually just like a 1% option fee, okay, over here, and 4% to exercise over here, okay. So this would be around 2 weeks, after which 8 to 12 weeks would be the completion where you do your remaining payment. So this is a normal condo, okay, which is rather straightforward. But EC, because it's government HDB approval required, it is slightly different. Before you put in your application for balloting, all the necessary documents like NRIC, your income documents, ownership details would have to be furnished and collected by the agents to be submitted to developer and then to HDB. So once you get your choice unit during balloting, right, you need to pay a 5% option fee of the purchase price, and within 1 week, right, the developer will submit the documents to HDB. Okay, this is within 1 week, and within 3 weeks upon submission, depending on the complexity of the case, okay, it will be the approval and issuing of the SMP. Okay, so as you can see, this is slightly different really, because over here, if more documents are required from HDB, they'll be back and forth asking you to provide more supporting documents. And once the SMP is being issued, within another 3 weeks, you would have to exercise, okay? Upon receiving a 3 weeks of exercise, and after which over here, you will have to pay, this is 2 weeks later, within these 2 weeks, you will have to pay the buyer stamp duty, 4 to 6%, depending on the amount you purchase lah. And finally, over here would be where you need to make the balance payment of 15%. This can be in cash or CPF. Whereas for the 5% option here, right, it is only cash. Okay, so this is a total of around 9 weeks from OTP date or date of signing SMP, whichever is later. Okay, so once we are over here, there's two types of payment scheme for executive condo, which is not seen in any other condos. The first would be the normal payment scheme. So if you take the normal payment scheme, right, you would be paying the foundation and everything as and when they are being caught. Okay, this is the first one, and you'll be paying the normal price. However, if you take the deferred payment scheme, which is the second payment scheme, you'll be paying around 3 to 4% higher of the purchase price, and there's no payment required, right, until TOP, no payment. Okay, so it's actually pretty justifiable, the 3 to 4%. It's just the interest the developer is charging you. If they're not charging you, then the bank would be, because you're taking a loan from them. So if you have better use of that money elsewhere and you do not want to pay for the next 2 to 3 years till TOP, you can choose this option. Of course, there's a good and bad, and depending on each individual case and scenario. Okay, I will not go too much into that. If you have any questions, just drop me a DM privately. Okay, next will be our affordability analysis. I've done up a full chart highlighting the combined household income and how much you can loan based on how much you earn and your age lah. Okay, so if you're earning 6,000 and you can loan a maximum of 30 years, okay, you can loan $355,000. Of course, if you're earning the top tier $16,000 combined household income, 30 years you can loan around $947,000 thereabouts. Okay, so this is the chart. If you want, you can screenshot it. If not, same thing, drop me a WhatsApp or a DM and I'll send this chart to you. Of course, all this you can find it online as well lah. Okay, moving on. Okay, before the start of any balloting, or even before you go down to a show flat preview, right, I'll run through this with my client, what I call the financial calculation worksheet, to check firstly, okay, a few things to note, whether your income allow you to loan a certain amount towards the purchase. Secondly, to determine whether you are a first or second timer, whether you qualify, and if there's any levy you need to pay back or grant that you are eligible for. Okay, after which, right, we will work out, right, the purchase price you're looking at and how much cash and CPF you would need, right, towards the purchase of your property. This is very, very important, okay, because it's not as straightforward. In some cases, you do need to sell a property, take a bridging loan, which I will touch on later. Okay, case study number 1. We use Peter and Jane as our example. So you can see here, Peter and Jane, they are 46 and 38 years old with a monthly income of 8,000 and 7,005 respectively. So the question is, how much can they loan? Okay, so for this, a few things you have to take note. They have different age. This is number 1, okay? age is 46 and 46. So how much can they loan towards a purchase of executive condo? I did not put it here, but for executive condo, right, how they judge is based on the MSR of 30%, okay, which differs from the usual TDSR of 55%. Okay? So they have a combined income of $15,500. If you're buying a private condominium or a resale condominium or a resale executive condominium, they will be using 55%. So how much you actually qualify for your income, right, is 15,500 times 55, 8525. Whereas if you're using MSR, it is actually on a basis of 30%, and the amount over here based on 30%, right? Let me check. Times 30. It's only 4,650. So the difference is quite huge. And this is one of the main reasons why EC owners have very strong holding power, because they have a lot of upfront cash and CPF payment. Okay. Next thing you will notice is, once we have determined by using this, right? Next thing you will notice is the difference in age. So what the bank does, right, to get a weighted average age, right, they use this formula and what they call the income weighted average age. So basically what they do is they will try to combine the income based on the total age multiplied by age plus income plus multiplied by age. Okay, so of course this depends on how many people they are. If there's 3, then you work out 3. Okay, and you divide by the total income. This will give you the income weighted average age. And if you were to plug in the numbers here, right, this is 46 multiplied by 8,000 plus 38 multiplied by 7,005, and we divide it by a total of $15,500. So over here, the number which we will be getting for the income weighted average age is 42.129. And what the bank always do, right, they'll round it up to the nearest whole number, which is 43. So in this case, if they are borrowing up to the maximum age of 65 years old, the bank will take their age as 43 years and loan them a maximum of 22 years. Okay, so based on what we have, and if we key in all the details inside a loan calculator, you can actually find it online, or I think Apple Store would have. What I'm using is from the Apple Store. We will just key in the numbers. So income taken into consideration is 4,650 per month. Loan is 22 years. And the interest rate is at 4.5%. Okay, interest rate 4.5% is standard stress test rate. How much they can loan is $778,391. Okay, this is their maximum loan amount over here. So we have answered the first question. Okay, moving on, this is an extension to the first question, because firstly you have to determine your max loan affordability. And the second one over here, if they have a 5-room BTO at Punggol and they have met their MOP and considering to upgrade into an executive condo, and on hand they have a total of 480,000 in cash and combined CPF of around $127,000, can they afford to buy a EC at $1.3 million? Okay, let's work it out using this financial calculation worksheet. Okay. Of course, first thing we have to write down is their name. This is Peter and Jane. Okay, sorry, my handwriting is very ugly. And in this case, they are considered a second timer. Why? Because they BTO from the government before. Hence, they need to pay a levy of $45,000. Okay, this one do check in with the HDB website or with me, because different year, right, would have different levy payable depending on what the rules and regulation of HDB is at that point of time. Okay. And over here, we have their income weighted average age, which is 42.129. Round up is 43. And TDSR, which we calculated earlier on, is 8525. And their MSR for income is 4650. So assuming they are just going for the normal payment scheme, doesn't really matter. The estimated eligible loan, which we calculated earlier on, is 778,391. Okay. If they're looking to buy something at $1.3 million over here, the maximum loan they are allowed to take, 75% of this, is $975,000. Okay, so over here you'll notice something interesting, right? Is there's actually a shortfall, but it doesn't mean that they really do need to take the maximum amount of loan. So purchase price is at $1.3 million. Okay, booking fee 5% will work out to be $65,000, and the balance payment 15% work out to be $195,000. Okay, do take note again, this 5% is cash only. Okay, and for balance payment is cash and CPF within 9 weeks from the option date. Okay. So legal fee usually is around $2,500 to $3,000 depending on which bank. All bank works the same. And now moving on, right, we will see whether they have sufficient in their cash and CPF OA to make this happen. This is a pretty straightforward case. So what we will do is we'll just fill in all the available cash is 480,000, and they are total CPF they have is 127,000. Okay, so we add everything up, cash and CPF 480,000, and their max loan amount of 778,391 minus, right, the stamp duty payable, which is, let me calculate, $36,600, and minus the legal fee payable. The maximum they can purchase, right, and this is without selling their house, is around 1.345,791, which is above this 1.3 million. Of course, if they would like to sell their house and purchase an even bigger unit, maybe a 4-bedroom, it is doable as well. So this financial worksheet is very important because you would know what you are missing out, right, to fill in the gaps for you to work out your affordability. Okay, so this case, not selling house, they are still within the range to buy something at a $1.3 million budget lah. Okay, next thing, moving on, I'll talk about something interesting, which is called the extended loan tenure. One thing you will notice, right, for executive condo, right, because of MSR, right, the condition and the income ceiling, right, the loan amount would usually not be very high. But there are people which are within like the 45 years to 55 years looking to buy executive condo, right? They'll run into this issue. They cannot borrow much from the bank if their loan tenure is very short because it's up to 65 years old. So the solution for this is, right, to get an extended loan tenure. Let's look at this home loan to value chart over here. Okay, it might seem a bit confusing, but let me summarize it for you. If you are a normal person taking a normal home loan, you can take up to an age of 65 years, and the maximum loan tenure, right, is 30 years. Okay, but there is this extended home loan tenure option, allowing you to take up to 75 years and up to 35 years of loan tenure. Okay, 75 of course is your age lah. So to give you an example, okay, let's go over here. Assuming today you are 50 years old, okay, 50 years old, and you're taking the normal loan tenure, you can only take up to 65 years, meaning the maximum loan tenure you can take is 15 years. Okay, however, if you choose the extended loan tenure option, okay, you can take up to 75 years, giving you a 25 years loan tenure option. Of course, you say, where got so good? It's not, it doesn't come with no condition. The condition is, right, if you want to take this extended loan tenure, right, your loan to value is capped at 55%, meaning if it's $1 million, you can only borrow 55%, as opposed to the normal 1 million, you can borrow a maximum of 75%, and your cash down payment, right, instead of 5%, now it will be at 10% instead. Okay, so back to our example, if you are taking at 15 years compared to 25 years, the difference is actually quite a fair bit. Okay, if you go back to the calculator, this chart over here, 15 years, assuming they are earning a max income of 16,000, they can loan 627,000. But if they were to take up to 25 years, right, they can take up to 863,000, which is around $140,000 more, assuming they have the 45% down payment for the next property. Okay, so then again, this is a case-by-case basis. Gauge your cash on hand and CPF on hand to see whether you have sufficient to form the down payment and whether it is required, right, for you to stretch the loan tenure all the way to the age of 75. One common reason why people do not do that, because they do not want to continue working past the age of 65 to continue to service the property. But it can be a short-term solution for you to increase your loan amount if you have other sources of money coming in elsewhere. Okay, so with that, let's move on to case study number 2 and see how this is applicable to you. Okay, so over here, Mr. and Mrs. Lim plan to upgrade to a 4-bedroom executive condo priced at $1.78 million. Okay, $1.78 million. Some basic facts and figures. Both of them are 40 years old for simplicity's sake, because very lazy I calculate the IWAA. And they have a money income of $7,000 and $9,000. So combined income, one look you can tell it's the ceiling $16,000. CPF OA combined, they have around $525,000, and cash on hand they have a sweet $300,000. Assuming it's at 4.5%, both are employed and not considering stamp duty. Can they afford to buy at 1.78 million? Let's do the calculation. Okay, so $16,000 multiplied by 30%. To do it, 16,000 multiplied by 30%. This will give us $4,800. Okay, so how much is the max loan amount based on 4,008? Same thing, we'll bring out our calculator. Oh, loan tenure would be 25 years. Okay, 25 years at 4.5. They can loan a maximum of $863,569. Okay, so with their cash on hand, which is 300,000, and the combined CPF they have, which is 525,000. The total purchase price for this, right, is at, okay, let's see, 863,569 plus 300,000 plus 525. It's only at 1.688,569. So you see there is a shortfall because the price they are looking to purchase is at 1.78 million. This is for a loan tenure to 65 years. Okay, what if they were to choose the extended loan tenure option? Okay, so you can always play around with all these numbers to see how much is your max loan eligibility and whether you can do the additional push or stretch to get a bigger or higher quantum unit lah. So same thing, everything here is the same. The only difference is instead of saying 65 years, they can go up to 75 years. Okay, so 75 years, right, minus 40 years old. How much more can they loan now? They can loan up to 35 years. Okay, over here is only 20 years on the normal loan tenure. Here it's only 20 years. So 35 years, right, the rest is the same. We just key in the numbers in the calculator, or rather, sorry, this is 25 years. Okay, rather we will just change the loan term. So the max loan over here, which they can get, right, significantly increased already. It's at 1,014,249 million. So highlight to you the difference. This is at 863. This is at 1.014 million, thereabouts. Difference is around 200,000. Then with the cash on hand of 300,000 and the CPF of 525,000, okay, they can easily buy, let's see, 300 plus 525 plus 1,014,249. Okay, they can easily buy a max purchase price of 1,839,249 million. Okay, this is their max purchase price. Okay, so can they buy this 1.78 million property? Yes, they can. This is the first test. Remember what I mentioned earlier on about the second one? They must have, firstly, 10% cash down payment, and secondly, they must have a total of 45% as down payment, and out of this 45%, right, minimally 10% must be cash. So let's work out how much this 45% is. So if they're looking to buy something at 178 million, 45% is 801,000. So do they have it? On hand, their cash and CPF portion, right, they have 825,000. So the first test pass because they can pay off this ma. And the second one is the cash component. They need to have 10% cash, which is 178,000. And how much cash do they have? They have $300,000 cash on hand, which is sufficient as well. So for them to buy something at 1.78 million, right, it is very doable, okay, because of all the requirements which they pass lah. Okay, so hopefully you understand this portion of the extended loan tenure, and it will help you when you're looking to purchase brand new EC. And the third one, right, which I'm going to talk about is something more interesting, which is called the special bridging loan. So why is special bridging loan required? Because there are some cases where people do not have that much cash or CPF on hand, but what do they have? They have HDB on hand. And what can they do, right, if they want to continue to stay in their HDB while waiting for the unit to complete? Okay, so it can be a case where there's a shortfall. I'll show you in the case study later. They can technically sign an undertaking letter to the bank to say that they will sell this HDB to pay off the bridging loan, to bridge the gap, right? Whatever gap that is required to purchase a brand new executive condo. So how does bridging loan works? Okay, most of the banks in Singapore, they do offer this bridging loan, but the terms and conditions for this bridging loan is different, case by case basis. Okay, this is just something which I gather for your own purpose, to seek out your own banker to find out whether this is still in line with what their bank are offering, because banks sometimes they change their policies here and there lah. So this is just a rough guide for you. There's UOB, OCBC, Maybank and DBS. For simplicity's sake, I will just take OCBC because it's easiest to calculate how much bridging loan they can afford to loan you based on your property value. And if you do take note something over here, they always take a haircut on your current property value. So instead of assuming that your HDB will appreciate, right, they assume that in the next 2-3 years time where you collect your keys for your BTO, for your EC, your current HDB would have depreciated in its market value lah. Okay, so moving on to case study number 3. Mr. and Mrs. Ong wanted to buy a 3-bedroom EC at 1.55 million. Currently, they own a 5-bedroom BTO flat at Bukit Batok with current market value of 710,000 and outstanding loan of 213,000. Okay, not considering stamp duty and resale levy, to keep it simple for you to understand. First thing you will notice, right, is okay, they are both at 40 years old. Money income is 7,000, 8,500, not too bad. But their cash on hand and OA is not as much as our previous example. So let's work out whether, right, they can buy this 3-bedroom at $1.55 million. Okay, so firstly, total household income is 15,500. Okay, total CPF OA is $222,000, and total cash on hand is $140,000. Okay, assuming they do not want to sell their house, they want to continue staying, can they afford to purchase? First thing we do is to calculate the loan once again. So 15,500 multiplied by 30%. Okay, MSR is at $4,650. Loan tenure which they can borrow up to is 25 years based on their age. So going back to our loan calculator at 25 and 4,650, they can loan a maximum amount of 836,583. Okay, over here. Combining their cash on hand, which is 222,000, and sorry, this is CPF. Let me get this out of the way. This is CPF and this is cash on hand, which is 140,000. The max purchase, if they choose not to sell their house, is 836,583 plus 222 and plus 140. Okay, it's only at $1.198,583, which is still a shortfall because what they are looking at, right, is 1.55 million. Okay, so you minus 1,198,583. The shortfall is around $351,000. So in a normal case, right, like a normal private or resale, right, they would definitely have to sell their house first to finance this property. But for executive condo, brand new executive condo, there's this option called the bridging loan. So effectively what it allows you to do, right, based on our formula earlier on, as you can see, this is the OCBC formula. Now the current market value of their HDB is at 710,000. They will take a 80% haircut, okay, multiply by 80%. This is the current market value. This is the haircut. And minus the outstanding home loan. And that would be the amount, right, which, okay, at least for OCBC, is willing to lend you to finance the purchase of your property now. Okay, so what amount do we get? 710,000 multiplied by 80% minus $213,300. So the bank is willing to loan them an additional $354,700 by just signing an undertaking letter saying that, oh, I'll sell my house and pay off whatever amount once they have collected their keys. So whether they can buy or not, yes, they can. If you see here, this is the amount which they have a shortfall, and this is the additional special bridging loan amount which the bank is willing to borrow upfront for you to complete your purchase? So the answer for this is rather straightforward. Yes, they can purchase if they do take a special bridging loan from the bank itself. Okay, so this is case study number 3, sorry. Let's go on to case study number 4. Okay, so Mr. and Mrs. Tan want to buy a 4-bedroom EC, which is 1.757600,000. Currently, they own a 5-room BTO with current market value of same 710,000 and an outstanding loan of $150,000. Okay, most of the informations are about the same now, just a bit here and there difference. Can they afford to buy with basic information as such? Okay, so if you can see, Mr. Lim is 40 years old, Mrs. Lim is 40 years old. Money income combined, let's do it together, it's $16,000. And for the combined CPF OA which they have, right, is 245,000, and cash on hand total they have is 200,000. Okay, so first thing first, same thing, we have to work out if they choose to continue to stay in the executive condo. Can they choose to stay in their existing HDB without selling? Can they buy? Okay, MSR, if you multiply by 30%, this would give us around 4,008. Okay, which is, this is the MSR. Maximum loan tenure is 25 years. So let's key into the calculator now. Okay, maximum loan amount which they can take from the bank. Okay, max loan is 863. Let me just round it up to 570. This is the maximum loan amount that you can take. Then you will know the usual steps already. You have to plus their CPF OA, and on top of that, they have to add their cash on hand. Okay, so one we will tell that this will be around 120-ish dollars, which is still 1.2 million ish, which is still a shortfall from 1.7. But let's work out the numbers. So it's 863, 570 plus 245, and plus 200,000. Okay, so a maximum purchase price, right, without selling their house, right, is 1.308 million thereabouts, and there's still a shortfall, right, of, let's calculate, 600 minus 1308570. Okay, there's still a shortfall of 1757 600 of around $449,000. And now we need to work on magic. Does bridging loan works over here? Okay, first thing you will see is 710,000. Same thing, you have to take a haircut of 80% minus whatever outstanding home loan they would have, and this would give us 710 multiplied by 80% and minus $150,000. This would give us 418,000, which sadly over here and over here there is still a shortfall of around $30,000 for 49030 of around 31,000. We just draw the difference here is around $31,000. Okay, so in this case, either they go and borrow back or steal, or if you remember, right, there's still one more options where you can combine, because this is the special bridging loan and this one we are just using the normal loan tenure of 35 years. What if they could stretch this, right, to 35 years? How much more can they borrow? Okay, let's work out the numbers. Okay, I'll just draw a line to differentiate. Once again, pardon the ugly handwriting. This is how I usually write. This I didn't score well in my exam. Not really. It's usually because I never studied. So this is the normal one, where they can borrow up to 25 years because they are 35 years old, and this is the max loan amount. Just to highlight. Okay, what if they choose to go for an extended loan tenure of 35 years? Okay, how we get 35? It's by using 75 years minus 40 years old. So this is the extended loan option. So same thing, for extended loan option, we will just change the 25 to 35 years, and immediately you will see the max loan, right, over here increase to 1.014 million, 249, okay, and plus the 245,000 and plus the 200,000 over here. The maximum price over here is, see, 1014, 249 plus 245 and plus 200,000. Okay, just make it neater for you to see. Maximum price here, they jump up by 1.459249. Okay, so you can compare This one, the difference is around 100,000, but do we really need 100,000? We don't need, right? The amount that we do require is over here, it's just $31,000 more. So if you were to add in over here, just for you to follow, the total amount they can loan together with the cash on hand and CPF on hand and the special bridging loan which the bank will lend to Mr. and Mrs. Tan, the combined maximum amount, right, which they can purchase up to, right, plus 418,000 is $1,877,249, which makes 1,757,600 affordable. Okay, so that's case study number 4. Okay, it looks a bit complicated with a lot of calculation, but trust me, it is not as complicated because there are more complex cases out there that require more calculations and understanding all the different scenarios to make sure that it works for you, because there might be cases where even if you sell a property and take a bridging loan, right, you still do not reach the amount you need to purchase the property. And if that's the case, then you would either need to do a pledging or unpledging, extended loan tenure. You have to look through all the different scenarios, right, to maximize your options to purchase an EC. So if you're looking to purchase an EC out there and you feel that instead of doing the calculation yourself, you want a more comprehensive and detailed calculation, right, do reach out to me and see how I can help to achieve your brand new executive condo dream. Once again, my name is Sherwin. Hope you enjoyed this video today, and if you want me to answer a very specific question of yours and you're paiseh to meet me, just DM me your questions and I will do the calculations for you and post it up on YouTube. Once again, remember to like, share and subscribe. Thank you very much.